Hi guys, how you all doing? It's been a while since I put a video this side. Well, go hectic. I've been very busy and yeah, but today I have a chance to just update you guys on gold. I remember we were expecting gold to react to this area here. If you watched the previous video I made on gold. So the thing is, remember I used to talk about the mentorship, and we started last week Monday, this week Monday, which is the reason why I haven't had a chance to put, videos this side. So this is the area where we were looking for, we're expecting a reaction and hope that the price will go up to at least this point. But you need to understand that the fundamentals will always, if there's, strong fundamentals, they will always violate the structures or on your thing. That's when you'll find that the price not respecting even your key areas on your chart in terms of the fundamentals will violate the structures you have on your technical analysis. All right, so here let's just start at the top and see how things are looking there, if they is still the same. So we can see that now the price is inside the lowest area of support. Remember when the price was coming down, we were trying to look for reactions from. Remember, this is an area of support. Even there's a smaller yana pause here, but the lowest one, the main one, will be this one here, which is the one that we are currently inside. And now it means if the price was to violate the current one, then the next one will be here, which means it will still have a very long way to go. But we don't predict the breakout. We just wait and see if the price is gonna break out. If it breaks out, and then we are going to react and look for trades in the to the downside. All right, so that's what you are having on monthly. Let's go down to weekly and see if anything has changed there on weekly. Let me just try and remove some of this stuff. So on weekly, what do we see? Remember, on weekly we had this as the area where we were interested to take the trade from. This one, this is the weekly area that we're trying to take trades from, and the price just came back and it violated it. Now it moved into this area here, and we know this is the monthly area of support like we saw in the previous time frame, this one. So the weekly one we have to remove. Why? Because the price has violated it. It does not exist anymore. So now that the price has violated that, but even though it has jumped into the thing, into the what do you call this, into the monthly area of support, this is our weekly trend line. This is our weekly trend line. This because we do have a lower low. Remember, we only put a trend line when the price makes a lower low or a higher high. That's the only time you know that the price is in a trend. That's why I have a trend line. If I don't have a trend, then I won't be able to put a trend line. You see, so that's what we are having. So it means on weekly, now the price, we can say it is inside the monthly area of support, which is, we can wait and see if it's gonna give us any reasons to go long. And if you are trading weekly, it means you are targeting what? The next opposing structure is the area of resistance, which is up here, or is going to be the bearish trend line. So whichever one gets hit first, that's the one where you're going to exit if you are trading weekly. And so that's all that you're having on weekly, which is just the bearish trend line, area of resistance here, and area of support. You can try and just mark an area of support here, but it will be around the same level as the monthly one. So you can just leave the monthly one like that and say, if I get reasons to go long and I'm trading weekly, I'll be targeting either this or that. But you can see the price is going to hit this one first, and we don't predict that a trend line is going to be broken. We just wait for the price to break it, and then after breaking it, we can look for reasons to go long and target this guy here. But when it gets to it, we are out. We're just gonna watch how the price reacts to it. So we never predict how the price is gonna move. So let's check daily, and then this is daily. This is our daily chart. So I need you to keep in mind the structure that you saw on, and what's this, the structure that you saw on what do you call this, on monthly. Because remember, everything must connect from monthly all the way down to even the smaller time frames, because if you don't connect them, then it won't be easy for you to take trades. So here we were expecting, remember this is the very same, around the very same weekly thing that I removed. Even this one was violated. And we were expecting the price to react around here. If you watched the previous video I made on gold, we were expecting it to react here. If let's say you call a reason to go long exactly here, but now the price, look at what it is doing. It is not moving up. Remember, we want moves like this. Like the guys that are in the mentorship, they know I explained to them these different time, what do you call this, the candlesticks and the shapes. What does this shape mean, and what does this one mean in terms of like the theory behind you, so that you, every time you find this candlestick for me, you know that, oh, the theory behind this candlestick, it means that, you know, the pressure is to the downside. Why? Because you can see by the long tails above. So if let's say you got a reason to go long here, right, and then the price was doing well, it moved until here, the candlestick was green, it was long, it was up until there. But before the day ended, because this is the daily chart, before the day ended, the price was pushed down. It came back and closed here for the first day. And then the second day, we're still playing around the same area. The price moved up. It is a nice green bar, which is what you want, but it fails to close up there. The bears are still pushing it down and forcing it to close lower. So that's not a good sign. Two bearish two bearish pin bars just above your entry point is not a good sign. It's not a good sign. If you have a trade and then the price is forming rejection candlesticks in the opposite direction just above your entry, that's not a good sign. The price can just reverse there and take your thing out. So you need to be able to read as much as you can read the structure when the candlesticks are grouped together like this. You also need to understand and be able to know what each candlestick is telling you in terms of the price action. Is it giving you like the odds? Is it increasing the odds in your favor, or is it working against you? Because here you can see two pin bars, and both of them is bearish pin bars because we've got the tails above, which means the price was trying to go up, but it was reversed and rejected and pushed it down. The next one rejected, pushed down. This is not a good sign. Now we can see the price went down. This is the move that violated that weekly what do you call this, weekly area of support that I removed. So now even this one, it means because it's been violated, you remove it. Now it means let's go to H4. I'll show you something. So I think we were somewhere around here. Look at this. Let's say you're trying to go long, right? When the price is coming back, you prefer it not giving you anything in between. Here you can see if it's moving like this and then it gives you a reason to go long. If you're buying, you expect to just take off. It mustn't play around, or it mustn't play around before entering your level, because it means now if you're trading H4, like we're looking at H4 here, let's say you were looking to go long from, let's say from around here, for example, right? Now the price, before it hits your thing, the area where you are trying to buy, it forms this pause. So the market pause, this is a resistance, this market pause. So it forms the market pause and then it comes down. You are trying to buy. Is it still a good idea or reason? Do you have a reason now to buy? Is it a good idea for you to buy? Yes or no? The answer would be no. Why? Because now remember, when you are buying, you are targeting the next opposing area. So in this case, if you are buying, you would be targeting the next opposing area, which was the area of resistance. And if you are looking, you just have to go back. You can see if I'm buying here, the next opposing structure on this time frame is here. So it means my profit margin now is compromised. I don't have enough profit margin for me to buy, because I can't just risk maybe, let's say, $100 just to make 60. You see? So the profit margin now is too small, which means I want it, if it's coming to my thing, I want it to come all the way down and not form anything and compromise my profit margin. Because if this was not there and you're trying to buy here, at least you know that the next opposing one will be all the way up there, which means the profit margin before the price can hit area of resistance is big enough, which is worth you taking a risk. But if the price is gonna form a zone just before hitting your thing, the area where you're trying to buy, then that's not a good sign, because now it means if I'm buying, I'll be targeting this and it's very close. So it's not something that is worth your thing. Where these are the things that you need to look out for when you are deciding, because not every zone that you're going to mark on your chart you're going to trade it. So when you're making a decision to say I'm trading this one and not that one, you should look at things like the profit margin, the whole structure in terms of the direction on the other time frames and the higher time frames and all the stuff like that. That's how you make your decision, so that you can decide to say, no, this zone here, it's not worth it, it's not worth it. Yes, the price might respect it, but it was not worth it. So I don't have to take a risk, uncalculated risk. So if the odds are against me, it does not mean that zone is not gonna work. It might work, Mara. You need to have a set of rules that you're going to follow, regardless of whether you rather apply rules and then the thing doesn't work than to break rules and then the thing works, because you'll always want to break rules. So that's what the Forex Goat, if you know those guys, they I remember them mentioning something like that. So rather always follow your rules even when they are not working. You know that if it's working most of the time, always do the same thing, because it means at the end of the day or end of the month you'll be on the positive side than to break rules, because once you break the rules and it works, you will always want to break the rules. It's okay to adjust your rules and to sort of update them if you feel like, no, this is happening a lot, and then you're trying to adjust how you're going to enter. It's okay to do that, but don't go against the rules just for no reason, just because, I don't know, because if it works, you'll always want to do the same thing, which is wrong. So now let's say where to from here. Remember, on monthly, what do we have? We have the price inside the monthly area of support. So which means maybe we can get a pullback. So this one, I think it was drawn on daily, so we don't want it this side. So on monthly, we can say we are expecting a pullback. Why? Because the price is inside the area of support, has gained control. The area of support on what? On your monthly. So we can expect the price maybe to pull back in the opposite direction, right? Now on weekly, it is still saying the same thing, even though we have got the bearish trend line to the downside on weekly, but now we've hit a higher time frame area of support. So the bearish trend line is a weekly one, and the thing, the what you call this, the monthly is higher than weekly, right? So if monthly is higher than weekly, it doesn't mean the price can't react on a weekly time frame because it's coming from monthly. It just means that monthly has higher chances of working than the day. But if you're taking trades, you are not the one to decide which one has to hold. When the price hits the opposite one, you are out, and then you just watch and see how it reacts, and then from there you can decide if the support wins. It means we'll be looking for trades to go all along and join that movement. If the price is reacting from this and it's coming back, you can look for reasons to go short and then trade that pullback to the downside. So that's how you should do it. So on weekly also is saying what? The price is inside that monthly, but if you get reasons to go long, remember we're not going to ignore this trend line. And then on daily, what do we have? So that we are trying to connect everything together. On daily, this is the opposing structure that we had, and then the price came back, and you can see like it paused here. So it means now that pause, the movement was no longer smooth. It was smooth coming all the way down until this point. And at this point, that's where you can say that, oh, the bulls were trying to come in, which is another area of what the market pause is also an area of support or resistance. So in this case, because we formed a pause when we were going down, this is a, what do you call this? This is an area of resistance. So if that area of resistance gets broken, it means you are going to shift your focus to the next area of resistance, which is going to be the one here. Remember, you must always have an area of resistance and area of support marked on your chart. When one of them gets broken, you shift your focus to the next one, and then you remove the one that is violated. So in this case, this one at the moment is not relevant. We can remove it. But even the current one, if you look at the current one, as much as it's a pause, right? But the price has never formed a candlestick away from it. So if you were to analyze, this thing was formed here, right? This red candlesticks, it still touches that zone. This next one, it still touches the zone. This one still touches the zone. This is the only candlestick that doesn't touch the zone, but it hasn't closed yet. you don't know if it will still push up and touch it. So it means you are not yet allowed to take this trade. Why? Because we don't have yet have like a price action away from the zone, because we want the price to play away before it can come back, then we can trade it. But in this case, we can't say we're taking a sell here. Why? Because this zone formed, but we never had like price action away from it, so it was not worth it. Even though the price seems like after going back to it with this green candlestick, it got rejected and went down again, but it was not worth it. Why? Because it never taken off from that zone, right? And what else can we say here? Because this is the daily, remember on weekly we put the weekly trend line. So on daily, we can say maybe the daily trend line is here. Because remember, we don't use the market pause to draw the trend line. We just want the swing. So that's the daily trend line. That's the daily trend line. So, and on daily, we don't yet have, because remember we said on the higher time frames, we are looking for reasons to go up, or we are looking for reversal signs and stuff like that. On daily, we don't have. We had a sort of a rejection candlestick here, but it failed. Remember, it's pointless for the price to give us a pin bar and still fail to go above it. So it's pointless. So if, let's say, price had broken that range of the pin bar and went above it, in this case it didn't do that. It just formed this sort of a pin bar, but the next candlestick, it broke the range to the downside and not to the upside. Remember? So it means on daily we don't yet have signs of reversal. Let's go down to H4. Remember, we are trying to buy. Why? Because we are inside that monthly area of what? The monthly area of support. So this is that daily. This is the H4. I think the daily just disappeared somewhere here. So this is the H4 that we had when we were going down. And then we said, if let's say you wanted to buy here, now the profit margin was compromised, and then this is the, we can just remove this from daily, the trend line that we drew that side. So we need to put a trend line that belongs to this, and this is the daily opposing zone. Let's just remove it, and then the H4, let's just remove and start afresh. So this is the H4 chart. Let's try and mark the first things first. Let's put a trend line. The trend line will say that the last swing we had was this one, which means this is the last point on our trend line. This is how you should approach it. This is the last point on our trend line, right? Now you just need to find the next point. It's up to you whether you're gonna, not personally, I would put it like this, because the price action here is not very smooth. I'll put it like that and say this is my H4 trend line. Now, if this is my H4 trend line, where is the H4 support? I mean resistance. The H4 resistance would be here. Someone can say, let me show you. This is the swing. Remember, this is the swing. The market, after forming that, it came back, and then the bulls tried to fight, but they got defeated. So this is another one. This is another, which is what? The market pause. This is the, it means this is then the nearest one, the nearest area of resistance, this one. Because of what? We came here, went down, pause, went down. But if you were looking for reasons to take trades, now I'd rather take this one here. Why? Because the one below does not look nice, and because of what? The type of candlestick that formed it, that is around it. So I'd rather take this one. But it does not mean this is not an area of resistance. It's an area of resistance, but if I was to take trades, I wouldn't trust this one. I would trust the one above it. But nonetheless, the one below is the nearest area of resistance on H4. So it means even on H4, we don't have anything yet, because even if you were to analyze the candlesticks around here, there's no like a pin bar or engulfing or anything. So if it doesn't give us those things that we want to show that the price is going up. So if, let's say, you get a reason to buy here on H1, remember, when it gets there, we don't predict that this H4 is going to be broken. So those are the things that you can look out for maybe next week. So if you get your reasons to go long here, you are going to exit somewhere here. But if the price continues to go up and violate the area of resistance and violate the trend line, then when it pulls back, you can take a trade to the upside. Why? Because remember, the price does not move like this. The price does not move like this. When it's going up, it will form an impulse move, and then it will pull back before giving us another impulse move. which is if it's in an uptrend, it will be forming stuff like this. So it will go up and then come back and then go up like that. So what is important is that when the price is coming back, it needs to make a smaller, like a pullback. So the move to the downside has to be smaller than the one when it's taking off and going to the upside. That's how you tell that the price is going up. So when the price is pulling back, we are always targeting the new wave. We are always trying to predict where this pullback is going to end so that we can take the next wave. We don't want to trade the pullback because we don't know where it's going to end. We don't know if it's just going to be a pause and then continue like that. We don't know if it's going to be a swing or a pause. So that's why we don't trade the pullbacks. Why? Because we are in an uptrend. We only focus on the thing, on the what do you call this, on the swing. We don't care about these ones, the swing. So that's why I'm saying, even here, if the price was to give you a reasons to go long on H1, you're going to exit at the trend line, right? Because of what? This is the opposing structure. But if the price continues without you, that's fine. You'd say now it has broken the opposing structures, which means if it gives me a pullback, I'll look for reasons to go long so that I can start a new wave like that and target the opposing structure. That's how you trade. So you can't buy here and say it's going to break the trend line. How do you know that? How do you know that? How do you know that the bearish trend line and the resistance are not gonna win and push the price back down? You see, those are the things that I wouldn't encourage you to trade against. Rather wait for the price to break those so that you know they don't exist anymore. When I'm buying after the pullback, I'll be having enough profit margin. That's how you should trade. So those are the things that you can look out for on gold. So if you don't get reasons to go long, then you don't have trades, even as much as the price is inside the monthly area of support. But if it gives you reasons to go long, you can go long and target the opposing structures and wait for the price to maybe break those opposing structures. See, even on H1, you don't even have any reasons to go long. So I would say just end at H4 because that's where the price looks a bit nicer than H1. So look for reasons to go, but it's probably going to be next week. So those are the things that you're looking for. If you get reasons to go long, targeting the opposing structures. If it gets broken, continue buying like that. But you're not gonna buy immediately. Buy the pullbacks to the nearest area of support. So if the pullback is pulling down, you just need to identify an area of support that looks nice, that has enough profit margin and all the stuff, so that you can trade that. That's how you should look at this one. Because the fundamentals, it's still a bit scary because of what all the zones that it violated, the good zones it violated when it's coming down. So here, but it does not mean, remember, everything that goes up must come down at some point. So even this one, just because it's falling like that, it doesn't mean it can't find support and start going up. You see, so if it gives us reasons to go long, we don't want to miss that, but we're not going to predict that this is the lowest point it's going to form and before it gives us like a long uptrend on monthly. No, we're not trading monthly. If you're on H4, focus on the structure on H4, but don't fight against the structure on monthly. But we cannot take a trade here and say I'm targeting this. I can't take the trade from the current structure and say I'm gonna put my stop loss up there. Are you gonna be able to hold all the way and all against, like, all the odds that you're gonna find on the thing on the way up? Are you gonna hold there and hope that it will come here? You see, that's not realistic. So that's not realistic. So those are the things that I want you to look out for on this chart. So that's full analysis. And for the guys that are in the program, the mentorship program, so we will continue that side. And then for everyone else, I will keep sharing the stuff here whenever I get a chance. And yeah, don't forget to like and subscribe, guys. And then remember, ka weekend, preferably Sunday. That's when I do things like Nasdaq in preparation for the coming week. So I'll make another video soon. All right, guys. Cheers.